Today we're going to be talking about some of my initial results that I've seen with the trading bot, the 3 or 4 different strategies that I've employed, and the thought process behind those. And then at the end, I'm also going to talk about just how to stay competitive in a high frequency trading game where you don't necessarily have a lot of the technological advances that some of the better financed players have. So my bot is running right now, and before I actually walk you through the code, I just wanted to show you some of my fills that I've seen. So right now, trying to sell some Litecoin here that I had picked up at 18.24.23. So this one's moved a little bit against me for now, but these orders will stay open for the hour to see if they get filled before another sell order comes out. So let's go down to, here's the last batch of buys, or maybe we'll go down to this one. Okay, so here's a whole batch of buys at 17.93, 17.96, and then selling at 97, 99, 801. You can see it sell because it's red on the side. And then we have some more buys, 17.98, 17.99, some sells at 1807, and rebuys 1788 up to, and then some sells 1795. And here's more buys at 182, and then we're selling 4 higher at 1824. We got rid of all those. And this all happened pretty quickly. The bot wasn't running through this whole period of time. I had it running some yesterday, and then these trades are the ones that just occurred, and then these are the ones that I had just picked up. So it's been working well. I haven't run it for like a full 24-hour period, but the few 5-hour periods that I've let it run have been between 2 and 3% gain in terms of my Bitcoin holdings. I have not seen a gain in my USD holdings just because Bitcoin has been going down so much, but I'm still bullish on it long term, so I'm not too worried. If I'm accumulating Bitcoin at the moment, I'm pretty happy with that. So, and I actually did have a strategy that was USD focused, and I'm gonna go over to that code in a second, but I was having less success with it because I think there's more competition for it. So what this strategy is first we identify the last price and assign it a variable, and then right here is where we do some of the calculations. So like in my previous video, I'm trading the strategy of when Ethereum Bitcoin pair or when Litecoin Bitcoin pair is undervalued by a certain percentage, I am then buying it. So this is saying if ETH BTC is undervalued by 0.29, because I calculate what the percentage should be based off the ETH USD and BTC USD trading pairs. So if it's undervalued by at least 0.29%, then we put a buy order in, a limit buy order in. So I'm not paying any fees, which is good. And then after that buy gets hit, we immediately place a sell order for ETH sell price, which is the price that I just bought at, ETH BTC price, plus 0.0018. And this 0.00018 is around 0.25 or 0.26. So what I'm basically doing is I'm buying the ETH BTC trading pair when it's trading at a discount to what the market says it should be, and then once the market reaches equilibrium again, I then sell it, and that is for around a 0.25, 0.26% gain. So that's it for Ethereum. It's basically the same thing down here for Litecoin. It's actually exactly the same thing. I'm trading it the exact same way. So whichever one has the opportunity, if the Litecoin pair is being inefficient, then I trade the Litecoin pair. If the Ethereum pair is inefficient, then I trade that pair. So this bot, this is my ETH trader bot, and it was one of the first ones I tried. I was pretty much flat after a bunch of hours of trading. And what it does is it runs through the full cycle. So this is, see, because this one's if it's positive. So this is if Ethereum Bitcoin is undervalued, then buy Ethereum Bitcoin, and then sell Ethereum, sell Ethereum USD, and then you have that USD that you then buy Bitcoin with. So buy Bitcoin USD, and then sell it on ETH BTC. So this is a full round trip one that I had mentioned in that first video. This would allow you to trade faster and stuff, but what I ended up finding is that when I was running this route, that you would have orders just sit there, not get filled, and I also believe that this is a more competitive strategy, that other people are doing this because it's kind of faster, and if you could execute this strategy properly, it would be the best strategy. But I think my strategy of just buying of the bot that I showed you before is actually better, because it's basically this strategy except you can beat these people to the punch. And you don't have to do as much trading, which just makes analyzing your results a lot easier and a lot safer. And also this kind of puts you at a disadvantage too, because I had it set to when the market isn't doing anything, when everything is fairly valued, to just stay in USD, which if you're long-term bullish on crypto and your bot has you holding USD 80% of the time, then you're going to miss out on a lot of those crypto gains. And then this last bot that I'll show you real quick is just a simple trade. Buy Ethereum when the Ethereum Bitcoin pair is undervalued, or sell it to hold Bitcoin when the Ethereum Bitcoin pair is overvalued. And the issue with this is that I was always banking for the market to oscillate one way or the other and get out of equilibrium. Whereas with my bot now, I actually sell when we reach equilibrium, or actually when we get close to equilibrium. And this strategy here, the first one that I showed you, is just better because you profit at equilibrium, and the market's natural state is equilibrium with everything fairly valued. So this one ended up having just more trades and more profitable trades, whereas on the simple switch between Ethereum and Bitcoin, depending on what is undervalued or overvalued, this one had a lot of trades get stuck, which was not ideal. So that's some of my my initial results. It's been pretty positive so far. I'm only trading about $500 of Bitcoin at the moment, which is a very small percentage of my stack, just because I want to test things out, see how everything goes. But since the initial results have been positive, I'm going to be scaling up my capital allocation to the bot. I think pretty big, but I'm going to be keeping a pretty close eye on it for sure. Obviously, because it is trading Bitcoin, and also my goal now is I'm looking at some of the other exchanges APIs, and I want to get hooked into those, because there is an API function to withdraw and deposit coin. So what this would allow you to do is to implement my original arbitrage trading that I was doing manually with the Excel spreadsheets. And this would just allow for like bigger spreads. You could make 1 to 1.5%. Obviously, settlement times take longer, but the main issue with that cross exchange, with the 4-point arbitrage across multiple exchanges, was having to manually do it, and that was not a very good process. So I'm going to be trying to automate that. There's going to be a lot more code involved, but I think I can get it figured out. So now that the technical part is out of the way, I just want to talk about some of the stuff I know about computer trading in general, some of the game theory behind it, and also I'll talk about Bitcoin market dominance. So just for a second at the end. So what's the concept of front running? So this happens all the time on Wall Street. Exchanges now, they sell warehouse space to high frequency trading firms, and basically they get to place their computers closer to where the exchange operates, so they get to send and receive orders faster than everybody else. So basically what happens is they get to front run messages. So the HFT guy can see the direct private message from the slow guy trading on E-Trade. They can see his order coming in, and then they can front run him and then buy whatever he was looking to buy, and then sell it back to him at a cent or two more. And these high frequency trading firms have been extremely successful, very profitable. There are many of these firms that have had like 1,000 or 2,000 days of profit every single day. So, which is absolutely insane. And this is because they have a very distinct competitive advantage over the slower trading guys. And that's the reason why, for my strategy, I am not. I am having my sell orders cancel after 1 hour. So originally I had this set to a minute, just like my buys. Sorry, that was on the wrong one. So originally I had my sells set to cancel after a minute, just like my buys. But I found what would happen is the market would move down a few points in a couple minutes, and then I would end up selling at the price I bought or perhaps lower. But this way I can just kind of cut out some of the noise that the high frequency traders are just causing and doing. So I'm basically trying to hedge myself against the advantage that they likely have. And I don't even know if this is occurring with GDAX or other cryptocurrency exchanges. I read on GDAX's website that they are using Amazon Web Services data center in West Virginia. So if high frequency traders are trading like geographically near there, that's what would give them the time advantage. If you want to know more about this topic, read the book Flash Boys by Michael Lewis. Absolutely fascinating book. And he talks about all these crazy strategies that these traders go through just to get information microseconds faster so that they can outtrade other people and be the first to the punch. Now, another reason that I'm bringing this up is that high-frequency traders, people who are just scalping and front-running orders, to me, this is not a long-term strategy because it's not adding value to the marketplace. So it's not making the market inefficient. Basically, they're just taking advantage of a loophole, right? They're not actually making the market more efficient. If anything, they're just directly extracting value from the market. They're just ripping off retail investors, small people who were just trying to buy small sums of stock. And my strategy here is to take a long-term view and to only implement trading strategies that add efficiency to the cryptocurrency market, which at the moment is highly inefficient. So I think there is a lot of ways to do that. Basically, what I mean is that for any single person to buy, like how my trading strategy is adding efficiency to the market is I'm helping to ensure that everything is fairly priced. So when ETH Bitcoin pair gets overvalued, I sell it so that then pushes the price down so that whoever goes to buy it has a better shot at getting a fair market price for their trade. And this will be even more crucial later on when I'm trading multiple exchanges. So some people think arbitrage is bad or negative for the market, but it is actually, it's a very positive force for the market, makes it more efficient, and it means that people get to buy at a fair price. Game theory, so just basically a lot of this is just trying to stay one step ahead of what the other algorithmic traders are doing. And one example of this for me is I'm just trading back and forth between Ethereum Bitcoin and Litecoin Bitcoin as opposed to making the round trip. So while other people are making the round trip, I am in a sense front running them. So I get to just directly buy Ethereum Bitcoin, whereas they might have to go through Ethereum USD, Bitcoin USD, and then buy it, if you see what I mean. So this is kind of just a heuristic. I don't have any like data to support this at the moment, but I'm basically trying to keep my strategy simple and try to stay ahead of whoever else could be trading out there, because they are most likely more sophisticated than I am. So yeah, so that's basically that. In my last video, I mentioned that if we had a significant pullback, that likely the best place to have your money is in Bitcoin. And that has been somewhat true, but obviously you were pretty screwed no matter what. When I made the video a week ago, we were sitting at like 30, 32, I thought. Maybe it actually never got that low. Bitcoin dominance was like 33, 34. And now we're sitting up at around 36, 37, 36. So you would have protected your wealth somewhat had you been in Bitcoin, but obviously not as much as I would have expected. Bitcoin really got hit pretty hard along with the rest of the alts. One other thing I want to do is just put this correction into some interesting light. So a lot of people think this correction is too strong or too overdone or whatever. But this is the 2013 bull run. So again, in the course of a year, we basically had a 14-fold increase. It was actually a little bit more this year. We had about a 20-fold increase in Bitcoin, and then the crash resulted in about 85% loss at the very bottom. So 1150 down to like 200. I think it's around 85%, and we haven't even had an 85% pullback yet. So this is the weekly chart for Bitcoin, and we've had around a 66% pullback as far as I can tell. Not even really that much. So I think we could easily. I think it's possible we fall to 3 or 4,000. I'll definitely be buying more at 3 or 4,000, but I don't think it's going to happen. But it's definitely possible, and history says that it's possible. So it's extremely likely, I think. So those are the main things I wanted to talk about. A few other things are how I'm going to structure these videos is I'm going to normally start with a technical topic. At the moment, it's the series that I'm doing on arbitrage trading. I'll actually talk about the code. And if you would like me to actually discuss the Python code or do a video of walking through and explaining like why I chose what code I did and the strategy that I did, I can do a more in-depth video on that, so please leave a comment if you want to see that information. But then also, I'm basically splitting my videos to where the first part will be technical information, and then the second part will be more abstract or just general concepts for the cryptocurrency space. So that way, I get to kind of talk about both things, which is more fun for me. So I think that's basically everything. So. Yeah, thank you so much for watching. Please like and subscribe to my channel if you are interested in the content. I'm trying to continue to bring you objective information that is useful to you. Please leave a comment of other stuff that you would like me to cover. Thank you so much for watching, and I hope you learned something.